John makes $4,000 a month. He works hard, saves a little, but every month he ends up broke. He's tired of stock tips, crypto hype, and get-rich-fast gurus. Then one day, his friend tells him, "You don't need to trade every day. You just need to own America." That one sentence changed John's financial life forever. Welcome to Alpha Money, Episode 3. Today, we'll uncover the lazy way to get rich in America: index funds. Think of an index fund like a giant basket of the strongest U.S. companies. When you invest in one index fund, you're not buying just one stock. You're buying pieces of 500 companies: Apple, Google, Amazon, Microsoft, Coca-Cola, and more. The most famous one? The S&P 500 Index Fund. It tracks the performance of the top 500 American businesses. So when America grows, your money grows too. Over the past 50 years, the S&P 500 has averaged around 10% annual returns. That's massive. If you invested just $500 a month for 40 years, you'd end up with nearly $1 million. Here's the best part. 90% of active investors, fund managers, traders, experts, can't beat this simple index. Even Warren Buffett says, if you don't want to spend your life picking stocks, just buy an S&P 500 index fund and never look back. Let's say you start today with $500 a month. At 10% average return, here's what happens. After 10 years, $95,000. After 20 years, $343,000. After 30 years, $986,000. That's the power of compound growth. Your money starts earning money, and then that money earns even more money. It's not about luck, it's about time. Getting started is easier than ever. You don't need a broker or a financial advisor. Here's how you do it. Open an account on Vanguard, Fidelity, or Charles Schwab. 2. Search for funds like Vanguard 500 Index Fund, VFIACE, Fidelity 500 Index Fund, FXAIX, Schwab S&P 500 Index Fund, SWPPX. 3. Start a recurring investment. Even $100 a month is enough. 4. Don't stop when the market crashes. That's when you're buying stocks on sale. The goal isn't to time the market. It's to spend time in the market. Here's why most people fail at investing: emotion. When the market falls, they panic. They sell low and buy back when it's high again. But index fund investors, they don't panic. They understand the long game. The S&P 500 survived every crash. The dot-com bubble, 2008, the pandemic, and it still came back stronger every single time. So when the market drops, don't freak out. Smile, because you're buying America at a discount. Meet Chris and David. Chris trades every week, chasing hot stocks. David quietly invests $500 divided by month in the S&P 500. 20 years later, Chris has stress, losses, and a few thousand saved. David, over $300,000 and peace of mind. He didn't trade. He didn't gamble. He just stayed consistent. The truth is, you don't need a PhD in finance to get rich. You just need patience, discipline, and time. The S&P 500 isn't a get-rich-quick scheme. It's a get-rich-for-sure plan. So stop trying to predict the market. Start owning it. This is Alpha Money, Episode 3. Because wealth isn't about luck. It's about time, consistency, and the courage to stay invested.